In this video, I'm going to share the 7 most important factors when it comes to my profitability in trading. These 7 things is something I have thought about for a while, and these are very important factors when it comes to me going from unprofitable to profitable. The first thing is cutting off all distractions. Now, when I say distractions, I refer to social media, specifically Twitter and TikTok. The moment when I decided to unfollow every single trader on all of my social media to make sure that when I went out of my office and I went home, I was not met with people having green days right when I have had a red day, right? Because this is some of the absolute worst you could do for yourself. The absolute biggest distraction in the majority of traders' life is going to be social media. You are going to get influenced by other people's analysis. If you come from a red day and you see 4 people on Twitter who've had green days, you start to question yourself. What did I do wrong? Did I do something wrong? Am I meant for this? How are these people making money when I'm losing money? And you'll end up feeling way worse. You'll get FOMO that could cause you to overtrade. And social media should just not be a part of your daily routine when it comes to trading. Not only social media, but just general distractions that take your mind away from the purpose or the goal. When I decided to really lock in on trading, I cut off every single distraction possible. I didn't go out, I didn't go clubbing, I didn't drink alcohol because these things were gonna get in the way of the goal that I had in mind. So getting rid of all the distractions is something that I personally believe helped me a ton, but specifically not listening to other people or not caring about other people's results, which is very, very hard to do if you are following all these people on social media. Everything can be faked. From broker statements to MetaTrader screenshots to TradingView P&L tools, all these things can be faked very, very easily. So do not get influenced by anything that you see on social media. The easiest way to make sure that you're not going to get influenced by any of this is to simply remove everything from your Twitter, your TikTok, your Facebook, your Instagram, just social media. You have to start looking at trading as a job. And when you leave your job, you really don't want to be working more, right? When you go home and you finish your day of trading and then you jump on Twitter and start looking at all this stuff, why would you do that? You would never do that with your normal job. Start looking at trading the same way. The next thing, letting go of my ego. Letting go of my ego is probably one of the biggest favors that I have done for my trading career. There was one point in my career where I cared more about looking like a good trader than actually being a good trader. So my ego caused me to make trading mistakes. It caused me to go very, very tight on my stop losses because that is what other people did on social media. That is what looked good. That is what was going to make me look and seem like a good trader. I was convinced that if I wasn't doing this and if I wasn't hitting 10-hour trades, I simply wasn't a good trader. And that was my ego talking. So finding ways to get rid of your ego in this specific industry or just in life in general, I think is very, very important. So whatever you have to do to get rid of your ego is exactly what you have to do. It doesn't matter what your trades look like if you are making money. It doesn't matter what system you're using if you're making money. The main objective here is to make money. So you shouldn't really care about what your trades look like. You shouldn't care about looking like a good trader. You should just be a good trader. So focusing on the improvement and good habits over ego and social media is essentially what I'm trying to tell you here. Get rid of the ego, trade exactly what works for you, and don't care about what other people think of your analysis or your trade execution. This is very, very important and probably one of the most important steps that you'll hear in this video. Ego is, again, not just important in trading, but it kills so many people's careers and lives because they simply listen too much to their ego. Ego can also cause over trading because the ego never likes to be wrong. So when you are wrong in a trade, which you will be, it's inevitable. If you have a high ego, you are way more likely going to continue trading and start over trading because your ego simply doesn't like to be wrong. So coming to terms with the fact that this is an industry where it's impossible not to be wrong is a very, very good way to get rid of your ego, in my opinion. It took me a really long time, but I feel like I've finally gotten it down. Obviously, there's still some ego involved as I am human, but it's certainly not as bad as it was, and it certainly improved my trading a ton. Data collection. You've heard it 1,000 times. Journaling is extremely, extremely important. I don't just say this to say it. I think it's very, very important. People are not looking at trading like a business. They are simply rolling out of bed, sliding their laptop across their lap, and then they start trading. You really cannot expect to see any results when you're treating it this way. There are people who are taking this craft very, very seriously. Meanwhile, you are treating it like a hobby. There's no money to be made when you are trading this way. If you take a look at any investment management firm or a hedge fund, they make all their traders do journaling, pre-market game plans, weekly outlooks, daily outlooks, all these different data collection things is implemented in every single hedge fund and every single investment management firm. At the end of the month, they go over all the results, they compare it, and then they figure out what they need to improve on for the next month. I think retail traders should be doing the exact same thing, because if the big institutions are doing it, there's absolutely no reason for you not to be doing it. It also becomes nearly impossible to figure out what you're doing wrong in certain conditions. If you don't have any data regarding your system, you have no idea when your system works, what time your system works, what economic data has to be present for this to work the best, what market conditions, geopolitical events, all these different factors that are so important to a trading strategy or system, you will have no idea about if you have not kept data. So journaling every single position has helped me out a ton. It's helped me understand my system. It's helped me refine my system. And that is ultimately what separates the profitable traders from the non-profitable traders. Profitable traders know exactly when their edge works, and they know when it doesn't. By knowing that, they also know when to size up, when to size down, and when to stay out completely. They would never know this if they didn't keep a trading journal. I understand that you've heard this 1,000 times, and you've probably journaled a little bit, but then slacked, a little bit, then slacked. I want you to stay consistent with journaling. If you cannot stay consistent with journaling your positions, how do you expect to become successful in this industry? Discipline is a big part of being a trader. It requires discipline to write in your journal every single day, but it has to be done. Not only journaling, but pre-market journaling or writing out your pre-market game plan, I also think is something that is essential. 30 minutes before open, I get onto my charts and I write out exactly what I want to see for that given day, what I expect. What am I going to do if it hits this key level? What am I going to do if we start displacing down right at open? Are we going for the gap fill? Are we displacing away from the gap? All these different things I write down pre-market, because my pre-market thoughts are rational thoughts. It also gives me way more confidence when it comes to executing my key levels, if it's key levels that I've watched for a longer period of time. So keeping a pre-market journal, I think it's really, really important. At the end of every day, I go in and I do this, which I call the end of day check-in, and I write a little bit about my day, about my trading day, and then I compare it to what I thought prior to market open. This is also a way to keep myself accountable, because it can be very humbling if I have written out something pre-market, an idea or an observation, and then I do the exact opposite of that. I have to tell myself that at the end of the day, at the end of day check-in. That can be very humbling, it can be very embarrassing, and therefore it's a great way to keep myself accountable. Trading is not like a job. You don't have a boss, so this guy's not going to tell you to do this. You have to do it yourself. So by coming up with ways to keep myself accountable when I don't have a boss to keep me accountable is exactly what I want to be doing as a trader, and I believe that a pre-market game plan is essential for this. Risk management. Risk management is should be the number one priority for a majority of traders, because I don't think people understand how little control we actually have. We have no control over the outcome of our trade. We have no control over the market. We essentially control nothing except the amount of risk that we put on. So the only thing that you realistically can control, you are not doubling down on. It simply doesn't make sense. I personally believe that risk management should be a top priority, because that is what saves you in drawdown. That is what saves you in the long run. It's basically the key to longevity. That is risk management. So figuring out exactly how much you are going to risk based off of certain factors, I think is very, very important. It's very important to be content and accept the amount of risk that you put on before you put on the trade, so that if it ends up losing, you are not surprised, you are not angry, because you accepted the fact that this can lose, and if it loses, I lose this amount. So if you are not serious about your risk management or consistent, I think that is a big flaw in your trading. And that is definitely something that you have to double down on. Now, risk management is also subjective. It has to do with psychology as well. If you feel your heart racing and your emotions start to get in play every time you put on a trade, you probably have on too much size. So figuring out a size that you are comfortable with, where you can execute relentlessly without having your emotions involved, I think is key. So if you take anything away from this video, I want it to be the risk management. Double down on it, figure out exactly how much you are willing to lose, and then stay consistent with whatever it is that you come up with. Strategy consistency. Being consistent with a particular system is what is going to elevate your trading. No trading system is going to work in the long run if you are not refining it, if you are not loyal to whatever system it is that you choose. Again, like I said earlier in this video, we have to refine our strategy. We have to use it over and over and over and over again in order for that system to become profitable. That is why you have support and resistance traders who are doing very well. Then you have support and resistance traders who are doing not so well. That is because the support and resistance traders who are doing very well have traded support and resistance for years on end, and they have been very loyal to that system. Therefore, they know exactly what to look for, when to look for it, when not to look for it, and everything in between. They know every single detail about their system, and that is why they can trade it profitably, which is also why it's not super important what system it is that you choose, whether that's order flow, support and resistance, ICT, SMC, it does not matter. What matters is finding a system and repeating it over and over and over again. The easiest way to be consistent with a strategy is to simplify it as much as possible. I personally believe that our job is to find a system or make a system as repeatable as possible. So having a system that is extremely hard to identify, like Wyckoff, for example, that may work for some people, but it's not a very easily repeatable strategy. And I think that's a downfall for a lot of traders. So finding a system and refining it and making it as simple as possible so that you can repeat it, I think is key, and it's helped me out a ton. Now, the last and final tip that I will give you is one execution per day. This is probably the biggest shift in my trading that I took, where I noticed a significant difference instantly. What happened to me a long time ago was that my red days were often a lot bigger than my green days. That is because I was very good at stepping away from the charts if I took a win, but if I took a loss, I would stay on the chart and continue trading. That is the easiest way to make sure that your red days are staying a lot bigger than your green days. So when I had the discipline to place one trade per day, whether that was a green trade, a break-even trade, or a red trade, I noticed a significant difference in my trading, because now my green days were bigger than my red days. What happens is, if you have a losing trade and you continue to trade and you are maybe a little bit inexperienced, you will have emotions involved in the trades going forward, and that is going to affect your decision making whether you notice it or not. So sticking to the rule of placing one trade a day, I think, is the absolute best tip that I could give someone who is struggling with profitability. It could be a very tedious process, because I understand that a lot of you want to be trading all the time. That is a problem within itself, and a way to battle that problem is actually to only place one trade per day and staying consistent with that. Again, if you are not able to do that, how do you expect to be successful? It all comes down to discipline. If you have no discipline, you won't be successful in any industry. So thank you a lot for watching. These were the 7 tips that I personally believe took me from unprofitable to profitable, and the absolute best advice that I could give any of you. I hope you enjoyed this video, and I'll see you in the next one.